Hey everyone, what's going on? It's Will here with Flow Trade Co. I'm bringing you guys another video in my self-study series. This one's going to be on the importance of keeping a trading journal. When I first started off, I would use my FX book, which was a very passive way to try to track your results. You pretty much link your broker to this online platform, and it would give you a matrix of all your statistics, everything from your drawdown to your Sharpe ratio, um, everything that you can imagine and more. And my issue with that is the fact that when I first joined and I first started my FX book, I don't think I actually needed all that data because I found myself researching more of the data than researching more of my trades. And then when I finally did balance out an understanding of like what some of those terminologies meant, at least the ones that really applied to my day-to-day trading, I realized that I found myself over optimizing or trying to over optimize my strategy to like meet the, you know, the best metrics that I could find, thinking that okay, if I get the best metrics, that it'll just somehow lead to profitability. Well, I could tell you, I had a few definitely profitable systems that I put on my FX book just from various different times that I was trading with them. But ultimately, none of them stuck. And it was, I think, because I tried to over optimize and I was never really focused on the core of my strategy, which is like me being able to improve my ability to make better decisions every time. And I think that that was something that my FX book didn't allow me to like understand. Now, like I said, I believe it was a little bit of an overload of information for me personally. Like somebody coming in with zero terminology, like very little experience, and like just kind of like trying to build it up. Like it wasn't really like made for beginners. You know, it's definitely made for like the more professional traders. Like you kind of know what you're doing now, and you kind of use that for a reason. Maybe even a prop firm trader, like somebody with like real specific type of rules and regulations that they have to follow. But for the most part, like regular traders, like all you need to do in your all you really need in your trading journal is to really put down the date, the time, the instrument traded, the direction of your trade, whether you bought or sold, the entry and the exit prices, your position sizes, and then some results, whatever your trade outcome was, and then the remarks about like what you were thinking, the play by play, all those little things that like went through your head maybe that impacted your decision to maybe move your stop or to cut profits early, like whatever it was that kind of happened. Your trading journal is where you want to add that stuff. Now, specifically, some people might be like, well, why do I need one of these? I mean, like, when you think about it, it helps you identify the areas where you might be making errors in your risk management, or, you know, you might not be taking enough risk. Like, maybe you're not utilizing your balance properly because, you know, for whatever reason, you're not realizing the true potential of what you got, or you're not trusting your strategy enough to like trade with the full like leverage that you need to make it worthwhile, you know? Or sometimes you could see that your position sizes was too large because your drawdown was too much, or you realize that you lost too many trades in a row, or you realize that like right after a trade hits your stop loss, it goes in the opposite direction. You know, just little things that you might be able to like make real life changes from. Like if something is happening over and over and over again, such as a stop loss getting hit too soon, and then you're constantly seeing that the market goes in your direction afterwards, maybe you need to work on your stop loss placements or maybe even your position sizing, which will allow you to maybe place a larger stop loss for the same exact amount of like for the same amount of money. It just kind of depends, but like these are the like insights that you gain from keeping a trading journal, like the ability to go back in your performance and look and see, and also like get an idea or a glimpse into like your mind with the remarks section by seeing like, okay, this is where I was, and like this is where I was in this trade. Oh, this is what happened. Ah, darn, I didn't see that. And then you can add those hindsight remarks in there to make them constructive, as opposed to being like coulda, shoulda, woulda. be like, okay, next time this. Or when I'm in this situation again, I'll do X. Whatever it is, it allows you to put a, you know, a more productive like perspective on whatever it is that you're experiencing that might be causing you, errors, whatever it might be. Now, when it comes down to it, like in the heat of the moment, I understand like it might be hard, especially if you're a day trader, to like try to write down every single thought you had as soon as you're in the trade, especially if you're entering trades like, quick. I understand that. But it's still can work to your benefit if you were to, maybe after you take a certain amount of trades or you reach a certain amount of time in the market, or maybe when the sessions change, you sit down and reevaluate, like, how was this session? Did I follow my plan? Like, what trades did I take? Like, okay, you took 10 trades in the session. Okay, maybe instead of breaking down each individual trade of the session, maybe you just mark down the prices and all that descriptive data. But at the same time, maybe you don't leave a remark on the specific trade. Maybe you leave a remark on the specific session. You get what I'm saying? Like, make sure it's tailored to like the information that you need so that you can grow and develop beyond what you like, where you are at the moment. But that's why having one of these is super imperative, bro. Um, but ultimately, it's, you know, I did mine actually on a spreadsheet. After I transitioned from using my FX book, realizing that, okay, this isn't going to work for me. I don't think I actually got to that point in the story yet, but to clear up that my FX book story, I had several like profitable systems with them, but as I started to say, I over optimized too much, and a lot of those systems ended up just either leaving at their profitability or never really going more, or actually end up blowing up in the long run, just given the fact that the performance curve was too fitted for specific metrics at different times. It's just, it's not sustainable to do such a thing. And it's not necessary either to have a profitable outcome. I'm thinking, okay, the higher my strike ratio, the more profitable I will be. That's not necessarily the case at all. I've seen, and even in my own results, I've seen strike rates of 40% much more profitable than a 90 or 80% strike rate. So at the end of the day, just it's all about having that data that you need, and that'll allow you to understand your performance. Now on here, I'm going to show you guys now the trading journal that I used. It was super simple, nothing too dramatic. Again, it's a very simple setup. This one, for example, started right here, and this was obviously a GBP USD trade if we're talking about the first one. And you can see my entry price, my stop loss, my target price. I have my net profit and the loss in terms of pips. I would have it as a percentage, but in terms of the math, I would rather allow this Excel to calculate that for me, as opposed to me trying to calculate the percentage of each specific trade it was. But and then after I have the notes and observations category, which, for example, in this one, I say in this trade, I noticed while the trend was down, price had bounced off support with a large upside, which is likely an indication this trend isn't as strong, and there may be bulls around this level. And then I pointed out that it would be wise to be mindful of support and resistance zones, even in trending markets. So this was a trade that I, this is clearly a trade that I would have shorted in. Damn, my bad. I didn't mean to pause out on you like that. But this is a trade where I clearly would have, like, I lost on this trade, and these are the reasons why. Clearly, I had mistaken a downward move into a support area as a breakout, and in fact, it was actually just a bounce. So I'm able to take that information from there, and then I go back into here, and then we see several days later, that was on the 16th. This one's on the 22nd. I'm able to go back and see, okay, I traded GBP again. Price here ended up around here. I ended up losing this trade again. As you can see, I thought that price was forming a triangle and it was breaking out to the downside. It broke upwards and hit my stop with large momentum. Thankfully, I had a tight stop and minimized my loss. So as you can see, when you're taking down your notes and you're writing the remarks as far as like what you did in your trade, it's okay to be also positive and reinforcing, so that as you're looking back on it, although you might have lost money, you're not going to view it in terms of the loss. You're able to view it unbiasedly and maybe even positively as like a pleasant experience, like something where okay, I lost money, but I gained the lesson. And since I gained that lesson, I don't got to lose that same amount of money no more. So as you can tell here, several days later, again on the GBP USD, I ended up taking another trade, da, 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 and then this time I got the position right. Bet. So this one was positive 107 pips. And then as you could tell, the previous two trips or two trades, my bad, trips. The previous two trades were totaled of negative 55 pips. And then on the next trade, I was obviously up 107 pips. And then, as you could tell, I wrote down some notes and some observations on this one as well. To paraphrase, this trade, there was a wider stop than my last few trades, but mostly due to the market structure at the moment. Um, I seen price bounce from a resistance followed by momentum in the direction of the main trend, which was downward. The trade took about 50 hours to hit the target. Now that's something interesting. I also want to point out, and I'm glad that I actually wrote this. I didn't plan that I was gonna go through these like that, but this one I actually made a note of how long the trade it took to expire, and then and that was something that allows me, if I do look back on it, it allows me to see things a little bit more like clearly and think, okay, some trades take longer. Not every trade is going to be hit overnight. I didn't exactly specify how long each of these two previous trades were, but in this one I did. And not every like observation or breakdown of every trade is going to be the same because these are happening as I'm experiencing them. This was a back test result from the GBP. So I was testing a system and these are the results of the back test. And I take my back tests very serious. I back test and I forward test, like just to make sure. But with this specific strategy, and it was a profitable strategy and is a profitable strategy to this day. Um, but for this one, I pretty much just noted some observations, some little play-by-play, some breakdowns, and then also something that I noticed about the future or the potential future of momentum. Um, where I see some more momentum to the downside or my profit area, I can move my stop just above my start, my target, and potentially aim for lower, um, more pips for the day. But at that time, I accepted what I got and knew that it was wise to close the trade and look for new trades at some point. Um, as you can tell, we can go on and on. I did a lot of these, but I'll just finish up on this last one and say that there are specific timings within this. So if you look at this first trade was the 16th. The next trade was the 22nd. The next trade after that was the 25th. So each of these trades happens roughly about you know, 3 or so days apart at first. But your first trades happened within 3 days. You had two losses in the same week. Your whole week may have started with two losses. You were able to evaluate on these two losses. And then later that week, you had that same opportunity and you came back and cleared everything. And this is the power of being able to use and utilize the data that you're getting from a trading journal. You're able to see what you did wrong. You're able to notice your losses. You're able to visually see them and inspect them, and then be able to go back to the charts and say, okay, on May 16th, 2018, the GBP was at 1.34823. I had a stop loss of 1.3517 and I had a target of 1.34175. With that being said, I ended up losing this trade for this specific reason, and that is now in the breakdown. So that's the power of using this. This is a very simple kind of trading journal, and it has all the information I need. Now, I noticed when I mentioned the what exactly your trading journal should have in it, I noticed that I might have mentioned some things that I don't personally have on mine, but it's not necessarily a one size fits all. If mine works for you and you like mine, shoot me a message, and I'll be able to provide you with a blank version of it as well. But if you want to start your own, it's actually relatively simple. And all you do is just go through, create the categories that you personally want, and then you track them. You fill this out after every trade or after every session, depending on what kind of trader you are, and just allow yourself to review this data. Don't just fill it in and don't ever look at it. Like review it at the end of your week. Review it. If you take one trade a day and you got 7 breakdowns at the end of the week, like take your time over the weekend reviewing it. Go back and look at your 7 trades that you took and go specifically see the prices, see the structure of the market, where it was, like see the price action, like how did it kind of pan out. And that'll definitely allow you to come out of that much more informed with some very helpful insights. And I pray that that video is also helpful, as I'm claiming that these trading journals will be. But once I started taking my trading journal serious and I actually started filling in this depth, and as you could tell, it's not a whole bunch of typing. Each of these maybe only takes like 4 or 5 minutes at the end of it, but the insights you gain from it are like freaking unreal, bro. It's like you can't pay for this. Like somebody, you couldn't pay somebody to read their trading journal and try to improve yourself, because their mistakes are not something that you did. So that's why making your own trading journal and looking at this and seeing your own self in this critical way, it's just I mean, the value, it just speaks for itself. But I begged all you guys to check that out. If this video was helpful, like it up. If you have any questions, comments, or if you are interested in maybe me sharing this trading journal, a blank version of it, um, comment down below and let me know. If I get enough of you guys that are interested, I will provide the blank version of my trading journal for you guys, free of charge, obviously. And then I pray that it helps you out. In the meantime, shoot, if you aren't subscribed and you want to hear more videos from my self study series, definitely subscribe below. And then, shoot, tune in for the next video. Until next time, God bless. Y'all stay healthy, stay positive, and shit, y'all stay profitable. I'll see y'all in the next one.